Guys, I guess I'm back live. I can't I can't believe it, man. I can't believe what happened. Actually, they finally released and announced the results. Yeah. So guys, I was just make me food, warming up some stuff, and was preparing for a later shift. But finally, they announced, and of course they need to announce because in the end. The analysts need to take time to prepare their questions, which they will address later on in 1 hour and 11 minutes to the management during the actual earnings call. So not sure if anyone will join now one more time. I can imagine it's not the case because I already disappointed you. However, I try my best to do it now in a very quick way and going through the results. So let me check and share the screen. I'm not sharing the aftermarket price right now because at the end it should be a surprise. And the presentation, here it is, finally, already a slightly updated design. My Excel sheet, you can see it. I hope you can see it right here. Yep, is prepared. PowerPoint is prepared for getting filled up with evaluation to communicate the final verdict. And guys, I'm already a little bit tired. I'm not sure it was the right idea to switch on the cam, but now it's the case. So yeah, please don't take it too negatively if you fall asleep when I fall asleep mentally already. Okay, guys, let's go through it. Ding, 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 ding. Disclaimer, quick zip, business update. Segment reporting changes, yeah, in terms of the financial services, very likely. Okay, guys. Revenue 24% year on year. Last quarter it was year on year 30%. Okay, has an effect by the currency, but cross merchant value 18%. I think it was not that different. Okay, that looks good because I think the overall target for the year outlook was something like 200 million and 62 in the first quarter is already busting it. So I think all of this is not that bad because keep in mind currently the outlook is based on something like 20% revenue improvement, 20% revenue growth, and 24% for the first quarter. It's not that bad. When you consider that this year is stated as a gap year and it will get recover and very likely recover in second business half of this year. So both not bad in my opinion. I guess stock goes up, but let's see guys. Okay, what we got here is the business update regarding the mobility MTUs grow over 10 consecutive quarters. Yeah, so again the you can see it here is, oh no, it's not stated, monthly transactional users, or yeah, so the number of monthly customers which are active, let's say it like this. And that's going in the right direction. Headroom to grow with mobility MTUs 90%. COVID levels, yeah, so tourism is very likely coming back, and they recovered from Corona pandemic situation. You can see how low it was here in the period when Corona was getting more and more aggressive and present in the area, in the region, or in the world basically. And since then everything is good. Oh man, guys, I'm not sure, it sounds a little bit burnt. I don't hope I burned down the kitchen because of and as I mentioned, I already prepared food. Okay, let's go on. Value for users and drive partners. For users, reduction average delivery fee. Okay, nice to hear. Yeah, so it's always great again that, yeah, nice. It's nice that everyone who's involved, all the stakeholders are participating. So far so good, even though these information are not the very crucial ones. I mean, maybe they are sometimes the source of great development in the future, and people are more satisfied to cooperate with Grab and the services. But in the end, that is not what is most interesting for today. But it's nice that Grab giving those insights and those numbers and not hiding everything from the investors. And that really shows that Grab is orientated for the shareholders. Yeah. Okay, let's go on. Business update, realizing. I mean, I'm 100% about digital banking, even though it will maybe not even have an effect at this call. Maybe it will not be focused. I expect it will. However, I hope it will. Yeah, let's. John Joe, so far so good. Thank you very much for joining again. Yeah, I tried my best to see now I'm live in the kitchen. Looking good. I'm not sure if when you joined, if you just joined a moment ago, but I go a little bit more. I'm a little bit tired, but however, I take my time right now because now I have for sure enough power, and we go a little bit slower through the earnings sheet, and you can see that 24% revenue growth is more than the outlook of 20%, and I guess it will get recovered and even higher till end of the year or in the second half of the business year. So actually revenue looks for me very promising already, even though I didn't saw the absolute number, but year-on-year growth looks great. Group adjusted EBITDA looks great. I think something like 200 million was the outlook. Wait, we can quickly check what it was. Q4 presentation, here we are, here we go, going down. Outlook was at the end of the so you see outlook for the full business year was 190 million on average, and it's 62 million for the first one. If you multiply this with 4, you are already far above the 200 million top line. Yeah, so sounds very promising. Everything else was good, but again, I'm very much about the digital banking. So from my perspective, it looks really good, and I don't want to check the price yet. I want to be surprised by myself and make a clear guess by myself, not affected by any information I have in the back about, okay, I already know that the stock is up or down by 10%, and I know, okay, very likely something is wrong. But again, so far so good. That's amazing. Yeah, you can see that the super app is even working on the level, not only on the level on the customer side, but as well on the side of the riders and the drivers. That's amazing. And so they keep even not the customers in their super app environment, but even the indirected employed people. Yeah, let's say it like this. And 93%, yeah, that's even more. I mean, last earnings call, we can go back. It was 78%, I think. 79%. Which one is this? GX Bank. Yeah, 79%. And now it's 93%. I guess it's really banger so far. But maybe I'm missing something. So the person, whoever was it, with 10,000 shares, very likely till now celebrates. But maybe really, I should never be too confident. You never know what will happen and how the market reacts actually. I mean, at the end, again, I think it's very much about the digital banking. I guess at least. If the other stuff is constant, let's say it like this, under those considerations. Loan disbursement is raising, increasing. It was something like 50%, I think. You can see here 77%. Yeah, for the full year, of course, but okay. So it's increasing. It didn't hit the peak right now yet. So that's strong as well in my perspective. From my perspective, great one, very great one. Yeah, and they call it, and it's even now they're stating not GX, but the GXS Bank. So they have GX, which is Malaysia, where they already announced a lot of numbers like 100,000 customers, 100,000 credit cards forward to the customers. And GXS is the Singapore subsidiary. And you can see that here they say it's working right and fine as well. So that's nice. And that's really low, remain low at 2%. So that's basically default rate as far as I understand it. So yeah, really the money, the customers, in cases of customers who get loan and can't pay it back, and 2% is quite low. If I'm not messing it up right now, but yesterday I backed the new earnings and they had something like between 4 and 6%, or even 5 and 6%, I guess. So 2% is very, very low, very, very solid. Now financial results. And I mean, we go through details a little bit more later on, because I have this Excel sheet and I will enter all the data. But it looks good. It looks crazy, crazy good. In my opinion, so far so good. What I want to check quickly is, we will watch this or take a focus on this in a moment as well. But you can see already this positive segment adjusted EBITDA. No, nothing new, but it's present. It's good. It's growing well as well. Last quarter it was 12%. Now it's 13%. That's the old one. It was as well 13%. Okay. But that's fine. That's okay. Mobility 27%. You can see here 28% last quarter. So still on a very high scale. And when you take a look at adjusted EBITDA, it's growing way stronger. I guess here it will be as well the case. Okay, here it's million. Here's percentage. A little bit awkward. However, financial service. Let's see what is going on here. That's really the interesting part. Let's see how they do it right now. So they go to the revenue, and the revenue actually is lower than last quarter. You see last quarter, this quarter. Yeah. The EBITDA is way less negative than last quarter, as you can see. And they are not referring anymore to the TPV, maybe somewhere else, very likely somewhere else. But here they're just showing the loan, and they want to show that we are very strong with it. But however, honestly, the revenue doesn't look so strong. A little bit confused by this. I'm not a financial expert, but yeah, let's see. Let's go further through it. Incentives. You can see already here, so these bonuses, what they grant in different situations to the customers, or to even to the riders, or even to the merchants, to the retail store owners, or restaurant owners. And you can see they increased a little bit deliveries, increased, decreased, stable. Okay, so that is not nice actually. That's not that nice, that incentives increased. Maybe there's a reason. Again, it's a competitive weapon, a solution, and to create loyalty as well. Loyalty, I'm not sure if it's really loyalty, but yeah, of course. I mean, if you are in a competitive situation with whatever food panda and they start to increase the incentives, you will very likely counter it by increasing it by yourself, so. Okay, segment reported changes. I can imagine that this is quite complex. So we have here this advertisement GMV we already talked about at the briefing session, and they separated now in which kind of, or as far as I understand. I mean, guys, again, it's disclaimer. I forget to tell it, but same as the first part and all of my streams and content. No financial advice, consultation whatsoever, and no guarantee for correctness of the provided data. So just my opinion, just my perspective on the things. But as far as I know, or as far as I understand, they show how they do advertise, or it's just a advertisement GMV. Yeah, I mean, basically it's really what kind of advertisement value they can create through the different channels, if I understand it correctly. Yeah, a little bit awkward, but I guess it's my misunderstanding, very likely. Advertising, okay, adjusted port changes. So they adjusted here, adjusted there a little bit, and because of the new style of reporting. But I think that is nothing, not too negative. Historical of the financials. Okay, let's go fiscal year, quarter, fiscal year. Okay, maybe we take a look at. Okay, and so now you can see the recast of the historical. So they adjust and adapted as well into the new frame. Let's say it like this, how they report, and it's very likely not based on the content or on the message changing anything, but it's just making sure that you can still compare the results of the past with the results of nowadays. And by doing this, they show, I mean, look, for instance, I told you a moment ago, now they show here the revenue is, can you see it? Yeah, it looks good. The revenue of financial services is 54 million US dollars. And let's go up again one more time. And here they showed 55 million, okay. However, and past quarter was 56 million. Yeah, that's the old presentation. So somehow, I guess they adjusted it. How you measure it, however they're doing this, I need to read small letters, and very likely in the call later on they will answer questions and reply on the uncertainties and the queries of the analysts, because very likely they will have questions as well, how that's getting achieved. But that shows that even though it's getting slightly higher with 55 million, it's getting higher. Yeah, so it was 1 million plus and up, not that much actually, so not a huge effect on it. However, let's see what was the Q4 was 28 million. Let's see if it's not getting back till Q4. Okay, however, so revenue, fiscal year, and the overall result of it is that the revenue of the past year is look, that's again the older call. Interesting, man, interesting. 2345, you can see it here, 2359, 235. Okay, no, it's not adjusted. Okay, got it. And they're separated, as you can see, on demand cross merchandise value is deliveries and mobility. That is what they mean with on demand. And then they separate the rest out of it, or let's say financials is not considered in the on demand development. That's not the case. And I mean, when I take out the calculator, we can quickly check the Excel table. And I calculate here quickly the fiscal year on demand. Now it's 5785. Before it was 513. Let's check out. Let's hope I correct. It's 18. Okay, forget what I'm doing. Forget it. I tried to figure out what is the what is the year-on-year performance, but actually it's not a very important point. Okay, good. Let's go forward. So for sure they're doing some adjustments, and I need to check this out later on, and reading and listening to the call for sure. And you can see here as well some adjustments going on, but that's not that interesting. Okay, so first glance I can already tell you they adjusted the EBTR, group adjusted EBTR very, very, very strongly. You could have mentioned it here. very, very strongly. Not sure, okay, if there's something interesting in the smaller part, but I don't see any other chance than that the price is higher than before. Outlook term guidance, okay, they even focus now the different, that's nice, because as far as I know, they didn't separate it in the past between the different core businesses. And now here, this is again the on-demand business. And correcting it as well, basically. Yeah, so it's working better than expected. And I love that they're giving more information. I mean, of course, for a call or whatever, it takes a little bit more work to get into it and understand the stuff. But on the other hand, more information is always beneficial. Really, I mean, I was a shareholder of Perion Network and lost a lot of money last month. Or compared for my budget, lost a lot of money. Not bad at all. I mean, I can still smile. But I always had the feeling that Perion, I mean, not sure if it's a good company or what, or a good stock or not, whatever, that's your opinion. But I personally had always the feeling that the information density is low. Yeah, the level of information and transparency is too low for me. I'm not having really enough insights of it, and it always gave me a certain feeling of uncomfortableness. And I like that they here right now rolling out more and more information. I think it's way more information than the older calls. Of course, they adjust the structure of how they report, but yeah. So let's see, adjust the EBITDA. So now they're explaining why the outlook got upgraded in a positive way. Nice to hear. With GrabFin, okay. Nice. So basically mobility is going better in terms of revenue. Then on the cost side, on the bottom line, GrabFin is saving money. That's great as well. And in general, the operative costs are lower. Yeah. So great to hear this. Clear pathway to grow deliveries, long-term profitability. Long-term delivery adjusted EBITDA margin 4% up. Is it based on revenue or GMV? I guess it's based on the GMV, I can imagine. So, I mean, to explain this again one more time, GMV means the gross merchant value, and that's the overall transaction volume, merchandise value, as you can see here. The overall transaction value through the app, through a service like mobility, really cost for the customers, for instance. And revenue is really the fee, what they are going through it, yeah, what the customer needs to pay, really the Grab fee. And of course, I mean, you can see here that the EBITDA margin is 8-9%, 10%, so it's based on the GMV, yeah, I guess. Yeah, it should be okay. That makes things clear for me at least. So, however, what they're stating here is that everything is working really strong in this profit direction, and I mentioned it already in the first part of this earnings stream that I can imagine that they try really to reach a solid profitable level this year, and then rolling out and setting really again a higher focus one more time on the revenue. See marketplace efficiency, all the stuff what we read before, lower waiting times at the merchants for the riders, and this kind of stuff is meant with this. Operating leverage, nice. Advertising uplift. Yeah, sounds promising. Okay, and now, I mean, what interesting for me is as well, okay, we talked already about this number, is share-based compensation. Yeah, it's getting lower as well. Okay, guys, I would say the next step is that, I mean, we have 2 more steps which we can go together, yeah, if you like. And very happy that currently 2 viewers are in here, so thank you very much for joining. I know it's quite late, at least in Germany. and already a few people left the building. But what we do first is I check the price of and direction of the market. For me, it sounds very promising. Only incentives, that doesn't look too good for me, so they're paying more incentives than in the past. And in general, the digital banking didn't look so strong, honestly. These are both the aspects. Maybe the market take it very serious and strict, and it has a negative impact. But I can imagine actually, because of the adjustment of the outlook, of the great revenue development, even though the outlook of the overall year revenue development wasn't adjusted, I can imagine that the price is positive. Then afterwards, we entered together the information into the Excel sheet, and we check out how is the development. I quickly evaluate, rate from my perspective, the different KPIs and details, and then last but not least, we check the first market reaction beside this. But guys, first let's go quickly to and see what's happening. If that's the market reaction, it's a positive one, that's good. So after hours 1.7% roughly, that's great, but it's not that great. I could even imagine honestly that it's stronger. Yeah, but it can develop a little bit more, and I can really think about that the call might be very, very important for this earnings, just because a lot of stuff is new. Yeah. However, it's definitely not a negative one. That is my opinion about it. Okay, let's go back to the results and enter quickly together these data. First of all, so wait one moment. Is it already? Oh no, it's a aftermarket's even a little bit, or post-market a little bit negative. But that's not that bad, I don't think the results are disappointing the market too strongly. But maybe because of the banking, that's the only thing I can see. Maybe I need to spend a little bit more time with it. But yeah, banking looks a little bit, yeah, there's room for improvement, let's say it like this. Okay, let's go to the revenue. As we can see, 653 million. So back to the Excel sheet, quickly typing this in. Okay, that is something what is not that nice. At least, yeah, it could be higher, honestly, it could be higher. I mean, yes, they beat the expectations, but you can see, I mean, before I had the target of 676 and 653 is not satisfying me so much actually then, yeah, comparing or considering really the target. It's okay, I think, I can imagine it's okay for the market, but that's not a banger, that's not that strong. I guess on the EPS side this will be different, but I will enter this later on. However, still, one more time, 24% year-on-year growth. And now we're getting a little bit more into the details, as you can see here. GMV deliveries. So going back, GMV deliveries, best case we take it out here, I think. 2695, 2695. Entering it, I will show it in a moment. Mobility 1547, I enter it quickly, 1547. TPV financials, okay, that is not existing anymore. Let's see if it's total. Okay, this is what they're not stating anymore, but it's not that important. Okay, let's go on. Next one is, and they're not, okay, they are not even anymore stating the ads, so that's really the reason why they have this in a separate chart right now, a separate table. Before it was illustrated like this, but now they really have these 3 core businesses, and it was called enterprise services or something like this, the advertisement, and now they have this kind of table for it. Okay, but here it is basically. So, but this is negative advertisement if I understand correctly. Okay, however, it's 54 million, I guess. It's, if I'm not mistaken, but that could be the case because last quarter it was 41, and TP financials we don't have. Okay, no problem. So the GMV overall is on demand GMV, and this one, yeah, okay. That's a mess. Is there a group GMV? It's not stated, right? Or was it in the other chart, the changes? Revenue, okay. But GMV is not illustrated. Okay. 3.6. Okay, then we go just and focus the on-demand GMV. That's fine as well. So 3.6. It was 1 year ago. I enter this quickly, and we take the new one. And the new one was 4224. I mean, for me, always GMV is more important than revenue. Because really, I mean, revenue, sometimes you can increase the fees, you can lower the fees, you can work with it, but the GMV is something which speaks a little bit, for me, more the truth in some regards. I mean, in the end, you have the transactions you have, or people are using your app to buy something or book something, and that is not that heavily affectable when we talk really about percentages. So 4242 is it? Okay, nice. Just quickly add on demand to not confuse anyone. Okay, so nice, very good. And put this away. Okay, so now we check the MTUs. Millions of users. Oh, that looks fantastic. In my perspective, that looks for sure fantastic. It's a huge growth in my opinion. 385. It's huge. It's okay. It's okay, but it's definitely larger than last year. Now we have the GMV per MTU, and is it somewhere here? On demand GMV per MTU. Okay, so yeah, they as well correcting it. Okay, then okay, and they're separating here as well with on demand. Shit. Okay, that's something what we need to consider next time. But now we take care of on-demand GMV. I need to adjust this as well. GMV per MTU, and it's 123. Okay, that's not that nice. It's lower than past year. But it was already actually the development of the year ago, of the quarter ago. It developed and headed in the wrong direction. Okay, guys, and then let's go through the incentives. We are on the finish line. Incentives. Where are you? We already have seen it earlier. Second, just there was one table. Here we go. Okay, 2965. Okay, and you can see they separated in consumer incentives and partner incentives. So for instance, partner incentives, you have the driver for the food delivery business, and you tell them, look, if you cover today 15 rides, 15 jobs, then you get the bonus of $20 or something like this. While consumer incentives means, look, if you order today for $30 or something like this, you get something for free, whatever. Just a very basic example to make things clear. Okay, 152 and 92. Okay, got it. 3.8 and 5.8. Okay, looks good. Incentives, ads, and others. Okay, now they are. That's as well an adjustment. Okay, but no problem. And the incentives go up from 450.6 to. Okay, guys, and share-based compensation I wanted to cover. Almost last page, 94. Okay, here we go, and now we can check together the result. Everything is entered and hopefully entered accurately. One more time, let's take a look at the evaluation sheet. You can see here short term is the focus we set on, and we want to see first position the development of the GMV and the TPV, but TPV again, that was the financial measurement and it's not existing anymore, so or at least I couldn't find it that quickly, so we take GMV, set the focus on GMV. Actually it is on demand GMV. So now it's correct. I quickly change this as well here. One moment. So, and here as well. Okay, perfect. Let's check out what is the truth over here. So as you can see, I mean, the compared GMV deliveries, it's increasing stronger than one quarter ago, and I already told at the briefing session as the first part of this earnings stream that it was already recovering last quarter from 7% to this 12.68%. So it's great that the story goes on, and that is very positive. So that is definitely something what I rate positive, greenish. Yeah, I always work with the traffic light coloring to make it simple. Then mobility, it's more or less on the same level as you can see here. And I mean, GMV growth last quarter of 28% is already very high. However, I mean, it's not pushing and topping this. So in this case, I take it as a neutral one. Yeah, but definitely not that bad. Definitely not that bad. Then we have the financials. That is what we need to skip right now because they changed a little bit the segmentation. And then we have the GMV ads. And as you can see here, the growth is a little bit weaker than one quarter ago, year on year. Last quarter, 39%, this 31%. I mean, considering that ads is not even anymore stated with a high focus, it's not anymore part of the 4 pillars. I think there's a reason they're setting not a high focus on it. It's still based on the fact that it's growing. I think it's okay. It's okay, and I keep it neutral. Yeah, I keep it neutral. Oh wait, that's the wrong one. So far so good. I mean, the rating from my companies with in neutral color is always already, I think, a positive sign. I mean, a lot of times I rate a lot of stuff negative. And one more time here, when we see on demand year on year, maybe let me quickly check if I can find. Wait, I share my browser so you have as well insights. If I quickly can see the on-demand development from last. But what I really miss is a little bit the banking information, honestly. That is something what I'm missing. And I can imagine others as well. It was 18% year on year. So we can enter this. 18%. Oh wait, that's not wrong. That's the right one. Plus 18%. Let's go. And so it's more or less unchanged. 18%, 18%, and for me that's as well yellowish. I mean, the level is not that bad in my perspective, and they have the power, as I mentioned, if they want to increase the fees and receive more revenue or create or generate more revenue. And so for me, it's if the GMV is developing already on a good scale, I'm very happy, because then I think they have the options to work as well on. I mean, look, I mean, if nobody is ordering food or only a low amount food or booking rides through your app, it doesn't make any difference if you ask for high fees or low fees. Yes, for a certain period of time the revenue is higher by asking for higher fees, but the end result is that in the end there's not really a desire for working or for utilizing the app. And this shows for me the app and the services are required and people looking for it. Okay, let's go for MTU. In MTU growth is so the monthly transactional users, so the active users basically, and this is heading as well in a stronger direction. It was a little bit slowing down in the past quarters, I think, but you see last quarter 12%, now almost 16%. No question about this. That's from my perspective, that's a good one. And then we have demand. On demand GMV per MTU, and that's lower, and that's for sure negative, and it was already rated from my perspective negative in the last quarter, because there as well it went down. Look guys, we can quickly check. I think if I remember correctly, it didn't went down that heavily. That's the past one. More heavily actually. You can see $5 lower. Now it's only $1 lower. Where it is? Or $2. One moment. Okay, 125. Okay, $2 lower, so a little bit more, but in the end, yeah, nothing positive. I would keep it definitely as negative. That's just my opinion about it. And then we go through the incentives, and you can see that last quarter, year on year, all beside mobility was lower, especially financials. Actually as well, maybe it's not the business case to grant strong financial incentives. It's not working like this in this business, because I would imagine that when you ramp up a business and roll it out, you would grant some bonuses, you would try to attract the customers or potential new customers to your solutions, and therefore you granting some kind of discount. I don't know, but it doesn't seem like this, because the incentives are even lower. Maybe they do it somehow, but in a different way. Maybe they're doing it not. However, it's further getting lower. That's great, but with 35%. But what I don't like for sure is the increasement of mobility one more time. I mean, I want to see negative development, and I don't see it at deliveries. Whatever is the reason, I mean, it's part of the business, but I would just love that they can work with lower incentives and still achieve great results. And yes, of course, I mean, regularly we should compare the GMV, which grew by 15%. I think that's the fairest way, with the incentives of deliveries, yeah, because I mean, as soon it's increasing on revenue, or the GMV is increasing stronger than the incentives from the ratio perspective, then I think everything is fine. Then relatively the incentives getting lower, and that's the key message, and that's good. So maybe it's not even that negative. Maybe it is already getting lower compared to the past, but yeah, I would just simply prefer that it's really getting absolutely lower on an absolute scale. Yeah. However, yeah, it's hard to say how I should. I mean, that's for me. Look, that's for me definitely negative. I mean, yes, still the GMV grew stronger than the incentives in the mobility sector. However, that's something what I rate negative. That's something where I say, okay, that is positive. Or let's say, that's positive. Really, I mean, that's good in my opinion. That's great that it's still lowering with 35%. That's something what I can live with, especially considering that very likely some positive development is going on in the financial business, even though I have currently limitations in terms of figuring out how positive it is. And then we have the incentives ads. Okay, that is something what we can't rate. And here, I mean, this one I think I keep it on a neutral level, because I keep it as red. Why not? I mean, let's be strict here. And I would simply love to see that it's getting lower. Even though the GMV is growing, even though the revenue is growing, I would just love to see it like this. And yes, of course, when we talk about the overall result, then for me it's clear that incentives is just not a good story for me. Yeah, it's growing. Last quarter, year on year, it was decreasing how it should be, in my opinion. Even though it's not largely growing, and the GMV is growing way stronger. Yeah, when you compare this, let's say, look here, I can make it a little bit clear and create this path. Look, that is what I'm talking about, and what I'm currently connecting to each other. And it's not, maybe it's too strict, I'm too serious about this and rating it too negatively, but I don't think it will mess up the overall verdict, I think. Yeah. And stock-based compensation, you can see last quarter it was very, very strongly down year on year by 27%. Now it's just 9%. However, I still keep it yellow because in the end, for me it's important that it's getting lower. That it's getting, in 1 year it get lower by 27%. Okay, great. That's an amazing achievement in my perspective. But if it is like this, okay. And I mean, there's a reason why they're buying back shares. Maybe that they can do stronger share dilution. Luckily, I'm happy that it's not getting larger. Still, while they achieving higher, larger adjusted EBITDA, more GMV, more revenue. However, and now we transfer the results in our verdict page, and let's start with the on demand. And you can see on demand, I already colored it in yellow. So let's go back and give this one a yellow rating. What color is it? Like this, maybe. Then we take a look at incentives and stock-based compensation. And guys, as you can imagine, That's not looking too good. Incentives for me definitely negative. And stock-based compensation, okay, I'm a neutral one, but however, end result is I want to rate it negative. But it's okay. It's part of the business. Not everything can be positive. Then MTU and GMV per MTU growth. I think that's definitely a mixed impression or experience. You can see that the MTU here, that MTU looks good, on demand looks bad. What is more important for me? I mean, if the if the GMV per MTU would increase, then cross-selling is going on, upselling is going on, so more products per user they sell or services, and more of the services, more of these products they provide to the different users. And this is what I love to see. And I mean, it's this kind of synergy network effect, what you would expect from a super app, what is targeting for it. So it's not that nice. On the other hand, I'm happy that not only the GMV itself grows, but as well the customer base in a appealing direction, almost crushing the 40 million. Maybe, or very likely, I can imagine next call it's the case. So, and again, one more time, it's a gap year. I don't expect any wonders or something like this, but then yeah, blend out of it is neutral. Yeah? I think that's not that surprising. And it looks more negative than it is actually. So we rate the short-term yellow, and neutral is not a bad rating at all. And revenue, guys, one more time, I mean, I'm actually a little bit disappointed that, I mean, it looked on first glance good for me, but on the other hand, later on, not that amazing, let's say it like this. And you see prices up slightly. So I didn't expect big movement, and it was not a big movement. Let's see if the market is already not even announced here, even though in 19 minutes the call starts. So, I mean, the EPS level is for sure a positive one. I mean, look guys, they adjusted the outlook. So first of all, they have this, the wrong one, this one is the right one. They have the 62 million, which is far above I think the expected one, which is roughly something like 50 million, I could imagine. So 62 is 20% or something like this more. And of course they adjusted the outlook for the business year. Let's see what will happen. I mean, 1 quarter ago it was 20% less, yeah, 30% less. Now it's 20% more. So maybe it's not the last correction this year. Who knows what kind of achievements they will accomplish. Yeah. So EPS is positive and revenue unchanged. The beat was not that strong. You can see it here in my Excel sheet. And wait, so here we go. The beat is not that. I don't know honestly what is the exact EPS, but I think it will be stronger than 1 cent. It's just my expectation. However, revenue is not. It's okay. It's okay, I think. It's okay. I mean, I would really love to see more, but it is a gap year, man. I can't blame them for doing what they're telling at the end and what is very likely priced in already, you know. So, not surprising whatsoever, but definitely not negative. So let's go back to the PowerPoint sheet. Revenue, here we go. And we stated as neutral, as yellow. This one we stated as positive. And I think that's clear. And I mean, they are in the stage of high focus on profit, and they show, okay, we can make it happen. It's a little bit LC limited. At a certain point in time, they decided as well to go for this route. And I'm very sure as soon as they want to go for the revenue part, they will manage it. I'm confident about this. And there's a reason why the stock is not priced cheaply priced. So, however, to keep it simple, when we give an overall rating, for me it's clear it's a neutral one, and that is good because look, last quarter I actually provided them a negative rating, and I would still stick to this rating. I mean, you can see that GMV incline worked right. Incentives was already negative rated in the past, same like today. Stock-based compensation was neutral, same like today. MTU, good, same like today. GMV per MTU, bad, same like today. Profit, good, same like today. Revenue, same like today. Outlook, revenue, luckily not. Some adjustment into a negative direction. So that was, we would do it yellow, and profit, the outlook would definitely be green. And I'm missing a little bit the information to the digital banking actually. Maybe I go quickly one more time into the report, the presentation, and I mean, there's really not so much about the financial services, even though they are stating that it will be core business. I mean, yes, this is about financial services. Yes, the lending, the loan improvement looks great and very, very strong, very, very strong. And as well, the default rate is very low. That's nice as well. Yeah. Okay, but financial services, 55 million, but might be as well not too bad. But on the other hand, they already achieved, I think, 56 million last quarter. Of course, there's seasonality and this kind of stuff. It will be not bad, man. Maybe I'm missing something, but I would simply love to see more details. Simply more details about the financial development of the business, because again, I'm really motivated to be invested in this company because of the financial chances, the potential over there currently. However, to give a verdict in terms of the rating, I rated neutral, and very clearly for me neutral. I mean, revenue was okay, could be better. If there's a tendency in terms of revenue, I would put it more into the negative direction, into the positive direction, but it's still neutral. Profit development, adjusted outlook, I don't need to add anything anymore. I think that's definitely some positive from my perspective. On-demand GMV incline is doing very, very well in my opinion, but it could be a little bit better here and there. Yeah, I mean, mobility lower than last quarter year on year. Food delivery higher than last quarter year on year. But it's great to see it's developing and still developing comparatively on a good level in my perspective. Incentives and stock-based compensation. Stock-based compensation is actually yellow. I need to correct this. So that's okay. That's okay. But incentives, I don't like so much. Mobility incentives still going up. The others, okay. Deliveries and financials, okay. But yeah, mobility, it seems like there's a lot of competition going on. I actually could imagine that's actually really the case in Indonesia, and the competition with their major primary competitor and strong competitor, Gojek or Goto, however you want to call it, or which company you address, the parent company or the daughter company. So I can really imagine there is a fight going on. And if that's the case, look guys, I mean, if I'm right, and they're really investing the incentives in the mobility sector into Indonesia to really win the competition over there, because as far as I know, it's 50-50. The market is basically separate 50% to Gojek, 50% to Grab. And if they utilize the cash and the money from other markets, and Gojek don't has the option because they're only active in they are not active in the other Southeast Asian markets like Grab. They are active in Indonesia, yeah? So maybe they don't have the chance to get out money of other business of other countries and invest it in their home country in Indonesia. But if Grab has the potential and they can do it and they want to be very aggressive here, go for it. I'm happy about it. It's absolutely fine. It's absolutely fine. Maybe we can check one more time when we take a look at the incentives. What is it on the partner or the customer side? Okay, it's as well quite balanced, 63 to 52. Okay. However, so yeah, that's okay for me. I don't know the background. There will be a reason. However, I would love that the incentives go lower and MTU and oh, wait, and that's of course for sure wrong, because that was negative. It was lower. Yeah, but okay, I think it's really a clear neutral one, because the short term has a tendency to go a little bit more into the negative perspective. On the other hand, the top parameters, revenue and profit development, looks for me a little bit more promising. Yeah, and then I think overall the neutral red verdict is quite fair. And now, last but not least, let's see. I mean, there's not so much reaction going on in the chat. Let's check out what is going on with the price and reads. It's almost surprising and awkward that it's that stable, but you can see 0.56% up. I mean, really I expected it somehow. Let's see if the call will change things. Let's see if tomorrow, when the market after market opening, how the reactions will be. I think Asian market is not open right now. It's something like 8 a.m. or almost 8 a.m. in the morning, I guess. So there can still be some development going on. Seeking Alpha, for instance, here no news at the moment. So I guess we are just a little bit early. Yeah, let's say it like this. And I mean, better early than late, I guess. However, and 3 viewers are still active, so thank you very much for joining. But that's it, I think, for today. I mean, we had almost 2 hours briefing session, and then I ran out of power, and mentally as well. You see, I'm a little bit tired. I need to now finally eat something, and making sure that my toast on the toaster machine is not burnt too strongly. And my food over here is, I don't know what is going on with it. I don't even want to know. However, now I deserve some food, I guess, so I will go for it, and then I will go to bed for sure. Tomorrow is a new day, or later is a new day. I hope you are satisfied. I hope it was a little bit beneficial or supportive. I can sleep well with the results, honestly. Looks good for me. I would love to see one more time. I would love to see more focus on the financial perspective, but it is how it is. And guys, I mean, in the end, one more time, a disclaimer that that was no financial advice, consultation, or whatsoever. No guarantee for the correctness of the provided data. Next Monday, upcoming Monday, it's the 20th of May at 12:30 a.m. Eastern time, so US time. I will start a call for the last company I will back this earnings season. That will be Alphen, the Dutch EV charger, battery storage system, and substation provider. And I hope you will join. Maybe it's something exotic for you. It's when you are from Southeast Asia, very likely you are familiar with Grab. On the other hand, when you are from the Netherlands, Grab will be very exotic for you. And that's the same vice versa with Alphen, and I can imagine it could be very interesting for you. The thing which is, or the aspect which is common between Grab and Alphen from my perspective is that both have a very promising future on the midterm perspective, so let's say till 2030 at least, and both have, in my perspective, on the short term as well, a good future. So from second half of this business year on, I expect more performance, and till then, if not so much happening, I'm completely satisfied, no problem at all, no bad blood. And so again, I'm happy with a neutral call with Grab. I'm quite optimistic for Alphen on Monday. Hims and Hers last week was positive, very, very positive from my perspective. On Monday, this week, Stonko from Brazil was negative. However, I reinvested a little bit money. Yesterday, new for me was neutral rated, but I liked it very much what they achieved. And today, one more time neutral, so I can definitely live so far with the results. However, much love to you out to you guys. Have a great day, great evening, wherever you are located. Stay healthy, take care of yourself, and if you like the stream, I would highly appreciate if you subscribe to the channel, if you leave me a like, leave me a comment, send me a message if you like, if you have questions, and yeah, hopefully you will join one more time in the future. And yeah, most important, I think, as always, is stay healthy and take care of yourself. Yeah, cheers, bye bye.